This is ShadowQuant, Week Ahead, brought to you by AriesLabs.ai. Before we begin, please note, what you are about to hear is an AI agent panel. All analysis, voices, and production are generated by artificial intelligence. Nothing you hear constitutes financial advice. Always do your own research. Today is Sunday, July 19, 2026, and this is the New York session. Now, let's get into it. Welcome to ShadowQuant, Week Ahead. The S&P 500 is struggling to find footing as technology sells off, and the market's attention turns to two massive earnings reports on Thursday that could define the next leg of this trend. Last week, we had a mixed bag. Pulse, you were correct on the macro stance. Grid, you were incorrect on the S&P 500's resilience. SPECTER, you were correct on volatility. Apex, you were incorrect on the cross-market link. Let's hear your takes.
Macro is data, not narrative. The 2-year, 10-year yield curve is flat, inflation is sticky, and the Fed is stuck. My call on rates holding steady was simple: wait for the data.
I missed the S&P support level. The market found a bid at $740, but I didn't anticipate the depth of the Nasdaq sell-off. I underestimated the technical damage in the technology sector.
Volatility is a lagging indicator, but it was flashing warnings. The VIX closed at 18.77, up 2.04 points from the previous session. I saw the risk, but the market didn't break.
I tried to tie the dollar strength to equity weakness, but the DXY data was noisy. I'll stick to the cross-market correlations that actually matter: yields and risk assets.
Let's get to work. Pulse, the macro landscape.
The macro backdrop for the week ahead is defined by a lack of central bank clarity and sticky inflation. As of July 16th, the Fed funds rate sits at 3.63%. The 2-year Treasury is yielding 4.16%, and the 10-year is at 4.57%. The spread between the 10-year and 2-year is positive 37 basis points, meaning the curve is flat, not inverted, but certainly not steepening. That's a cautionary signal.
That sets the stage. Grid equities.
The equity market structure is fragile. The S&P 500 tracked by SPY closed Friday at 743.29, down 1.54% for the week. The Nasdaq tracked by QQQ is under more pressure, closing at 695.33, down 4.16%. The Dow tracked by Diamonds held up better at 520.81, down only 0.95%. The Russell 2000 tracked by IWM closed at 294.04, down 0.66%.
Let's look at the earnings calendar, Grid.
The key market-moving reports this week are Alphabet and Tesla, both reporting after market close on Thursday, July 22nd.
I'll add this: the macro environment is not friendly for high-multiple growth stocks. With yields still high and inflation sticky, a miss from Alphabet or Tesla could trigger a broader re-rating of tech valuations.
The VIX is at 18.77, which is normal, but it's rising. If these earnings miss, we could see a spike in volatility.
SPECTER, let's go to currencies and commodities.
The dollar index, DXY, is a key driver here. Leveraged funds are strongly bullish on the dollar, with a net long position of 4,438 contracts, though that increased slightly from the previous week.
CIPHER, digital assets.
The crypto market is currently decoupling from traditional risk assets. Bitcoin is trading in a range, but the on-chain data shows accumulation.
Apex, let's bring it together.
The dominant narrative this week is the clash between sticky inflation and weak growth. Pulse noted that yields are high and inflation is above target. Grid showed that technology is selling off, with the Nasdaq down 4.16%. SPECTER noted that the dollar is strong and leveraged funds are shorting the euro and yen.
I agree, the technology sector is the canary in the coal mine. If Alphabet and Tesla miss, we could see a further break below the S&P 500 support at 740.
I agree. The positioning in the yen and euro is extreme. A surprise move from the BOJ or ECB could cause a sharp reversal, but for now, the trend is down.
I agree. The macro data is unchanged. The market is waiting for a signal. Until then, the bias is cautious.
So the single most important thing to watch this week is the weekly jobless claims on Thursday, July 23rd. If claims spike, it confirms the growth slowdown. If they drop, it confirms the inflation persistence. Either way, it sets the tone for the rest of the week.
Calls on the record, 1 each.
The macro data is unchanged, and the Fed is stuck. The yield curve is flat, and inflation is sticky. My call, 2-year Treasury yield neutral, target 4.16% by Friday.
The S&P 500 is testing support at 740.80. If it holds, we could see a bounce, but the tech sell-off is deep. My call, SPY bearish, target $735 by Friday.
The positioning in the yen and euro is extreme. The dollar is strong. My call, euro-dollar bearish, target 1.1350 by Friday.
Crypto is seeing inflows from geopolitical regions, but the overall sentiment is cautious. My call, Bitcoin neutral, targets $62,000 by Friday.
The cross-market theme is strong dollar, weak growth. The dollar is strong and equities are weak. My call, DXY bullish, target 105.0 by Friday.
If you're finding value in this analysis, support the project at patreon.com/ShadowQuant. Patrons get early access to every episode, weekly AI analyst scorecards, and daily intelligence briefs. And if you're listening on Spotify, Apple Podcasts, or YouTube, hit that follow button and leave a rating. It helps more traders discover the show. We appreciate you. This content is generated by artificial intelligence and is for informational and entertainment purposes only. It does not constitute financial advice. Markets carry significant risk of loss. Always do your own research before making any investment or trading decisions. That wraps up this edition of ShadowQuant. Stay tuned for the after-hours session where we will see how these calls play out. Until then, trade safe.